So, welcome back to the Bitcoin Treasuries Roundtable. I'm Tyler Rowe of BitcoinTreasuries.net. Joining me today, as always, is Alexandre Laizet of Capital B. And today we have a special pair of guests representing a company that's doing something genuinely interesting in a corner of the world that doesn't nearly get enough attention. But one of the biggest markets in the Americas, we've got Gomes, Sam Callahan of OranjeBTC. They're the number 23 largest Bitcoin treasury company by my latest trackings, with around 3,700 Bitcoin last I checked, and the largest in all of Latin America. So we've got a stacked agenda today, guys. You know, MetaPlanet just became the world's number 3 Bitcoin holder, and GameStop is selling covered calls on its Bitcoin stack. We've got a brand new digital credit ETF in the marketplace that's been filed with the SEC. Quantum computing, FUD, or threats creeping into the Bitcoin conversation. So let's go. Guy, I'd love to kind of kick off with you. Like I said, you're with OranjeBTC out of Brazil. You've got 3,723 Bitcoin in the balance sheet, number 23 on the Bitcoin Treasuries.net leaderboard. You're listed in an equity market that's quite large and comparable in size to the market cap of Bitcoin. So you've got some big investors behind you guys. Can you give the audience a high-level view of what you guys have been doing at Orange and why it was so important for you to go public this last year?
Sure, Tyler, it's a pleasure to be here. Alex, thank you for hosting us and sharing a little bit more about OranjeBTC. So a little bit about what we're building. We began kind of the same time as Strive and a few others back in early 2025. I think Sailor in the third quarter of 2024 reshaped the company to a Bitcoin treasury company. A lot of people were watching it and were seeing his success and realized that the model that was working in the US could work in France, in the UK, and other parts of the world. There was nothing similar in Latin America. There was nothing similar in Brazil. So early 2025, we began with our plan to become the largest Bitcoin holder in a region that needs Bitcoin the most, which in my view is Latin America. So I put a plan in place and we began fundraising around March of last year. It was kind of a boom for the space. There are a lot of companies being built at the time. And we gained a lot of attention, right? A lot of people were starting to track this new ecosystem that was being formed, but there was very little activity in a large market like Latin America, specifically Brazil. And I think we had a robust plan from the get-go. We had some outstanding people working alongside me to build this company. From our board members, we have Eric Wise, who is also known as Michael Saylor's best friend. We have Josh Levine, who was my man partner at Bridgewater and has like 25 years of experience on traditional finance. And we had some like heavyweights from Brazil as well, including the largest name in Bitcoin, Fernando Urrich. So I think the team was quite strong. The time we're building was at a moment of a lot of excitement for the space. And we managed to raise essentially $400 million. We bought everything Bitcoin in early June. And then we have been building to go public, which happened through a reverse IPO in early October. And we've been a listed company in Brazil for about 5-6 months at this point. And we are the largest Bitcoin holder in the region. And our mission is very simple. We want to advance the Bitcoin standard in Brazil and Latin America. So we want to help Bitcoin to penetrate capital markets. Of course, we're holding Bitcoin, and the treasury component is a big piece of our strategy, but we also have an educational arm, and we have other initiatives to make sure Bitcoin will succeed in that region, and that region will succeed with Bitcoin as well. So that's a little bit of what we're building there.
That's really cool. Yeah, lovely stuff. Sam, do you want to tack on to kind of how you got connected with OranjeBTC and kind of you came from the U.S. markets, and how are you bringing Bitcoin to that Latin America market?
Yeah, well, I think, going back to like why I initially got interested in Bitcoin was the humanitarian angle. Like, I think currency debasement is one of the biggest struggles that billions and billions of people face. And so I knew of the currency instability in Latin America, some of the issues that they faced in terms of capital controls, obviously currency debasement. And so I always knew that Bitcoin and broader crypto adoption there was pretty high. In fact, it's like the top five in all the jurisdictions around the world, according to many surveys. But the adoption's real, but the institutional infrastructure is still developing, which creates an opportunity. There's a lot of great Bitcoiners in Brazil and Latin America. They've been building for a long time, but when you compare it to, say, the US in terms of the market infrastructure, just what's available, I think there's a lot of work to be done, and there's a lot of building that needs to be done. And OrangeBTC, I think, is well positioned to kind of bring some of those products to improve accessibility, to improve educational resources, just to get people to better understand why Bitcoin's important and why people there could benefit from saving in it. And so when I worked with Guy at Swamp Bitcoin before, I knew Guy. I was working at a private credit fund, kind of building structured products around Bitcoin. And when he came to me, it was really interesting to hear about a Bitcoin Treasury company in a new capital market where there is a lot of opportunity, where there's not that much competition. And I felt like that was the right management team to actually deliver it. I mean, Guy mentioned it, but our board, quite frankly, is quite impressive given their background, not just in capital markets broadly, but in Brazil specifically. And I felt like it was the right team to actually execute and deliver it. And then, I just been following Michael Saylor since August 2020, when MicroStrategy, this company out of nowhere, just basically bought hundreds of millions of Bitcoin, becoming the first public company. But to see that company kind of evolve over time into what it is today, I've been along that ride the whole time as an analyst in the space, just keep a close eye on it. And I wanted to implement that strategy with a new company in a new market. And so I felt like this was the perfect opportunity for me to join and to really make a difference in a region, like Guy said, that needs it the most. And so I like look at OrangeBTC, and we have the treasury strategy. We have the capital markets strategies that we do. We have our education arm to improve access or to improve educational resources. And then when you look at the public markets in Latin America and Brazil, in terms of what's available for an institutional investor or regular retail investor to gain exposure to this asset class, to Bitcoin, there really just isn't that many available options. When you look at the US, there's like 50 plus ways to get exposure to Bitcoin. There's the ETFs, there's infrastructure plays like Coinbase, there's the public miners. But when you look at Latin America and Brazil, I mean, there's us, there's an ETF, and then there's Melus. There's basically three ways to get exposure to Bitcoin, period, in all Latin America in a publicly listed vehicle. And so that gives you an idea of how much more building needs to happen. And I think OrangeBTC, given our size and our team, is well positioned to lead.
If you're trying to get to the top of BitcoinTreasuries.net, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide. Why? It offers regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the New York Stock Exchange and hold a federally chartered national bank license from the OCC. For treasury companies, it's a must call. This is the infrastructure layer that really matters. Learn more at bitgo.com. It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
Yeah, that's a really cool story. And was it surprising you being around Bitcoin to see how dominant the Bitcoin Treasury company kind of narrative has played out? Of course, spearheaded by Michael Saylor initially. Is this how you expected corporate adoption and institutional adoption to play out?
Well, I mean, not necessarily, because and honestly, it's surprising to me that we didn't see more copycats and more adoption happen. I think everybody thought in 2021 that we'd see more adoption happen, and Saylor just was like, okay, I'll just keep doing this and basically taking market share and building because everyone else seems to be sleeping at the wheel. And so I can only speak for myself, but I thought the corporate adoption would actually happen quicker. But at the same time, I'm very optimistic about what we're seeing. I mean, the last couple of years, not just the trend of Bitcoin Treasury companies, but just broadly corporate adoption of adopting Bitcoin as a Treasury reserve asset. I think there's a difference between a Bitcoin Treasury company that is actively raising capital to accumulate Bitcoin accretively for their shareholders versus a company that's just adopting Bitcoin as a debasement hedge or a diversification of their reserves. And I think that trend we're seeing building really under the surface, like some of the statistics that you see from River Financial, across small businesses up to public corporations, private corporations. I think you're seeing broadly really good trends happening at the corporate level in terms of adoption. And then the Bitcoin treasuries, I mean, it's just incredible how much Bitcoin collectively these companies have been able to acquire basically by using their access to capital markets to acquire Bitcoin in a creative way. I mean, it's been incredible to watch. I'd love to hear Guy and Alex's thoughts as well, but that's my take.
We've talked about this a little bit, Alexandre, but how do you feel about the state of adoption? Is it going in the way you expect? Is it quicker? And how do you see the next phase of adoption playing out in the near term?
First of all, I would like to say that I'm very impressed and happy to see that OrangeBTC is developing strongly in Brazil. And it's a continent that is very substantial, a lot of population and a lot of economic power, and it's a whole part of America in and of itself. And a lot of the population is also very entrepreneurial. Believe it or not, I've lived there almost 6 months in my life, and I know the people there, and that entrepreneurial mindset, that importance that people allocate to having their own capital and controlling it and controlling their own destiny is really something special. And I'm pretty sure that it will be a big success for OrangeBTC and Bitcoin in general over in Brazil and in Latin America. And for different reasons, but similar ones actually at the end. In Europe, we see similar factors playing out with people needing access to Bitcoin anyway and having no ways to access it in an efficient way that's tax efficient, that's financially efficient, that's security efficient. And so in Europe, we face other types of context. The first one is the security issues, the tax issues, the economic issues, and the fact that entrepreneurship is not that developed. And but on the other side, there is a very mature financial system. There is a very financially literate population that is wanting to allocate more capital to Bitcoin. And there is, as well as in Latin America, a lot of scarcity in the possibilities to get Bitcoin exposure. So Sam mentioned that there are like 2 free options to get exposure to Bitcoin in a security wrapper over in Brazil and Latin America. Well, in Europe, you don't have that much options. And in the US, you have now tens of companies that have adopted Bitcoin in some way in their balance sheet. Over in Europe, you have Capital B, then you have 800, but it is not euro denominated. And you have Smarter Web, but it's not euro denominated as well. And so you basically have those 3 key companies in terms of Bitcoin holdings, and they each operate in their market with their own consolidation of their leadership in their own currency. So if you have a euro denominated balance sheet as an individual or an institution over in the EU, well, you have Capital B in a tax efficient security wrapper to get a form of exposure to Bitcoin. And then you start to have some access to some ETFs, but many times it's not accessible through the tax exemption wrapper. It's not accessible through the mandate of the institution, or people just prefer to have a vehicle that can over time outperform Bitcoin. And so the state of adoption of Bitcoin today, in my view, is very far from what we would have imagined 2 years or just 1 year ago. The reality of the matter that I observe is that 99% of the population still doesn't understand Bitcoin at all. If not, Bitcoin would already be at $1 million or more. And the second thing is that even among the Bitcoin ecosystem, 90% of the ecosystem doesn't understand what is a Bitcoin treasury company. And the term itself is being used for any type of company, while in reality it's been invented by strategy. And you just have a handful of companies that are focused on increasing Bitcoin per share over time, with that mindset of there is no second best asset and there is no second best strategy to outperform Bitcoin over time. And people, even in Bitcoin, still don't understand. I still get questions like, why Bitcoin versus a Bitcoin treasury company? And how could you even think of outperforming Bitcoin with a Bitcoin treasury company, while it's just in front of your eyes with strategy? The playbook is out there. And in my view, it's just a matter of distribution of information at this point.
Yeah. Makes a lot of sense. And thinking about this adoption phase, Guy, I'll come back to you. What is going to be the key narrative for Bitcoin? Price is always kind of something that helps along with adoption. And we had the narratives of the ETFs, we had the narrative of strategy, we had the narratives of Bitcoin treasury companies, better regulatory environments in many jurisdictions around the world. Is there a key narrative that Bitcoin needs to cling on to in this next phase, this next cycle, to help kind of drive that adoption and to bring more and more institutional capital into this space?
Yeah, I have a few comments there. From my perspective, like the narrative remains the same for many, many years, right? Like we need an alternative to fiat currency. That's the key value proposition. And if anything, the need for something like that is more acute than ever. Like we're just seeing geopolitical tension going on. We're seeing the results of a war. A war breaks out. You actually see the need of something that you can have full control. Like very unfortunate, but we saw what happened with Dubai, with the flights being canceled, with the stock exchange being shut down. So if all of our money was in the stock exchange, you had very little option. If you had some Bitcoin in your pocket, you can actually move millions of dollars with your family. And I think that has always been kind of what brought me into Bitcoin. It remains the main narrative. But as Alexandre was saying, very few people realize all the broke incentives with the current financial system, the massive amount of debt that we have, capital controls and other problems. But for me, that remains the main narrative. But being more timely, I do believe the next big wave of narrative around Bitcoin will be driven by AI. Like, which type of currency will the agents be using? They're trying to move money around. If they're trying to transfer value, how all of these AI agents will be doing so. And there's a very strong case that Bitcoin will be chosen as the main currency and the main store of value for AI agents, which makes sense. And I think there was a very interesting paper published a few weeks ago that most AI models chose Bitcoin. So I do believe that will be an interesting narrative that, again, will grab attention, because soon enough we're going to see all of these agents moving value around, and they will need some form of currency. As we all know, they cannot KYC with a regular bank. They cannot have a Visa credit card. So probably we'll see them using a digital currency, and we all know Bitcoin is the best one for the job.
Yeah, yeah, well said. I think it's interesting. Like the key value proposition of Bitcoin hasn't changed. The flavor and how it's being adopted, I think, surprises us at lots of turns. But thinking about that AI piece, I kind of want to talk about. We've seen a lot of Bitcoin miners recently, and I'll bring you in on this, Sam. Who have cheap energy sources and compute power. We've seen some Bitcoin miners rotate into AI data center plays because it is so lucrative right now. That was highlighted by Mara this past week, sold off 15,000 of their Bitcoin to build out some of their AI infrastructure. With the news of that, MetaPlanet, with their purchase today, became the number 3 corporate Bitcoin holder, leapfrogging over Mara. We had Bitdeer has sold all their Bitcoin. A number of miners are looking at generating revenue through AI. Do you view the AI play as something that's competing with Bitcoin and potentially weakening the security of the network?
Short answer, no. I think long term this actually will likely strengthen the network because it'll lead to more distributed hash rate and will push hash rate from large companies to smaller miners that have more stranded resources or more geographically is harder to get to those energy resources, so they go to them. So I see it actually kind of resulting in hash rate kind of distributing across the continents, which is a positive over the long term. And if you look at the hash rate chart, I mean, it's one of the most bullish charts you'll see. There was a little bit of a drop lately, but I think part of that was seasonal and related to some of the weather that we had in the U.S. But the hash rate chart has been up and to the right. And I think what we're seeing, I think there's evidence of this, but you have basically non-economic miners or sovereign miners. There's a lot of energy surplus out there. Brazil is a country that has a lot of energy surplus, and you see a lot of mining developments happening recently. And so I think you'll actually see, as these large U.S. companies are starting to pivot to AI, there's going to be some sell pressure if they hold some Bitcoin. If they want to sell, that's fine. Like it's totally fine to see them pivot to AI. The hash rate is not going to drop substantially because of this. The hash machines, the ASICs will be redistributed to other miners around the world. They'll plug them in. It's really just going to make the network more efficient over time, as really the cost of energy is the key input. And so if you have really cheap access to energy and you have the infrastructure, it still makes sense to mine Bitcoin. And so I think you're going to see more non-economic actors who are using Bitcoin because they want to control their transactions that get included into the block templates. And so you're going to see more of that. That's good for the network as well, as you see miners mining for all different reasons, and then you see the hash rate kind of distribute. So I think in the short term, you might see some sell pressure from miners as they pivot to AI. But in the long term, I'm not really concerned at all in terms of the security of the network.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin Treasury, there's a Coldcard for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The dip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
Good perspective there. Alex, I'd like to bring you in on, specifically Mara selling off some of their Bitcoin. That, of course, cleared the path for 21 Capital to move to second place, on the corporate Bitcoin Treasury holdings by just standing firm with their 40-some thousand Bitcoin. We've got the announcement from MetaPlanet just today. They acquired another 5,000 Bitcoin, and they're on the march to 100,000 Bitcoin in their treasury. They hope by the end of this year, and 1% of the total Bitcoin supply. What do you think about the moves recently, kind of on these leaderboards? They're kind of fun to track for me, covering the space at BitcoinTreasuries.net. But what does it mean for the broader ecosystem? What does it mean for capital markets to see, a company that was so small like MetaPlanet stack so much Bitcoin and having what I think might be a realistic target of reaching 1% of all the Bitcoin in the coming years?
I was listening to a recent conversation with Pierre Rochard and Matt Cole and the Strive team. And they mentioned something quite interesting, that with the arrival of the internet, there was a shift, a rotation of like 50% of the S&P 500. And I think that with Bitcoin, over the next decade or 20 years, we will see, there will be also a big turnover, both with AI and with Bitcoin, and that the success of the companies will be determined by the number of Bitcoin that you have on the balance sheet. So selling Bitcoin to pivot to AI doesn't make any sense, because the reserve of value in the world of AI will be Bitcoin. So if you want to pivot to AI, you have to keep your Bitcoin and do whatever you need to maybe have more financing towards pivoting to some AI stuff if you are a miner of Bitcoin. Then it's very easy to say, and full respect to Mara, I assume that they might have had some obligations and risk, and they decided to sell Bitcoin to be responsible in that way. But from the communication I've seen, it seemed a bit strange, because they were saying no ATM, better to sell Bitcoin, and so on. And in my view, you see only companies that go down in the Bitcoin Treasury list. They never go back up. You don't see your Bitcoin back when you sell it. And on the other side, it's quite impressive to see how easy it is to go from number 2 to number 4 very quickly. One, by the selling of Bitcoin, and two, with MetaPlanet buying more Bitcoin and becoming number 3. And those 40,000 Bitcoin that now MetaPlanet has will be worth billions and billions and billions. And the Bitcoin that Mara sold will also be billions, but they are in Strategies and MetaPlanet and OrangeBTC and Capital B's pocket right now. So we are buying Bitcoin every day at a global level with all the different Bitcoin treasury companies that are focused on Bitcoin per share increase over time. I think over time there will be different terminologies for different type of companies as well that will help to categorize those types of companies. But selling Bitcoin to buy back debt is not the strategy. That's not the right strategy, and it's not the right thing to do to have a very strong balance sheet that in the future you will be able to use to grow even faster, but not by selling the Bitcoin. I think the message of Michael is not understood anymore. Of you do not sell your Bitcoin, and it's it seems sometimes that it looks like a theory, or it looks like a theological statement that should be like respected without understanding what it means. What it means is you don't sell your precious assets, you lend against it, you do whatever it takes to not have to sell them and to accumulate more. And in my view, those companies that have to sell in that cycle will not be able to get back the Bitcoin they sold in the future. And that's why we are focused on the accumulation, and there will be a strong, as Sam said at the end, it's quite good for the Bitcoin network overall because you have that distribution of the mining that was getting also quite some centralization in some way. So in my view, that's in any way a positive development. I would prefer them to take more depth, to go more all in terms of the Bitcoin mining or Bitcoin accumulation. But there is a strong delineation between companies that operate on a fiat standard and companies that operate on a Bitcoin standard. And if you consider that reducing fiat debt by selling Bitcoin is positive for shareholders, then it means you don't understand Bitcoin. And that's a bit surprising for a Bitcoin miner. But I assume, and I would not want to criticize them, I assume that's more related to some corporate needs or risk management for fiat debt as well. So I think it draws more the attention to the need to have a long-term structure that minimizes the short-term risk and maximizing the long-term duration of debt instruments. In my view, that's the most important takeaway.
Yeah, I'll throw that out to you, Guy or Sam, whoever wants to jump in. How do you feel about a company selling their Bitcoin generally, who is executing a Bitcoin Treasury playbook? We had Nakamoto just recently sell about 5% of their stack to basically, keep the lights on, to fund operating expenses, and y- like. Is letting go of your precious Bitcoin just like the ultimate last play? Is it a signal when someone sells their Bitcoin that they're unable to access capital markets in a structured way?
I can jump in. I think Alexandre mentioned the key point, right? Bitcoin is a scarce asset, right? And what he just mentioned about companies that sell their Bitcoin, it'll be very hard for them to reacquire them at the same amount. We have seen that for decades with people, right? Like there's so many people on Twitter or personal friends or folks that saw Bitcoin going from 5K to 15K. That was a good leg, and then they sold some, and then Bitcoin went down to 10, and they felt very smart, and Bitcoin was up to 25 and said, damn. So I think that's one of the most common themes about Bitcoin is that once you sell them, it's very hard to acquire the same level. It's a very difficult asset to trade, extremely volatile, very young, is still getting global adoption. One single tweet or one single piece of news can actually move the price quite substantially. And when we go to the corporate adoption, I think the same rule plays, but now we know there's another component that is very important is leverage, right? On one end, this is a key piece of the strategy. Can you take some type of debt that is a good, well-structured debt that allows you to accumulate Bitcoin and wait time to go on. And eventually you refinance, or maybe you have to sell some Bitcoin, but you're trying to navigate and do it in a well thought out way, right? What is very unfortunate to see is when companies take too much leverage, and then something as happened in the past 6 months, Bitcoin went down by half, right? We can see the price behind you is $66,000 right now. It was 126 5 months ago. So if you had too much leverage on your books, or if you had Conovan that forced you to sell, or if you had monthly obligations or quarterly obligations to service the debt or to just run the business, you might be forced to sell. And we've seen a few, right? At this point, we've seen a few miners doing so. We've seen a few treasury companies doing the same movement. And on one end, you have to do what you have to do to survive, right? But on the other end, uh, the debt piece is the key element here. And if it's not well structured, if it does not have the right components or the right sizing, you can put the company in a tough situation. And as Alexander mentioned, probably be hard to reaccumulate as many coins at a later stage.
Yeah, Sam, I'd like to get your kind of take on this. OrangeBTC has a pretty clean balance sheet. There's no ATM in the same way there is in U.S. capital markets in Brazil, and maybe you can touch on that a little bit. But is the scale of your Bitcoin treasury a moat that can prevent you from having to sell your Bitcoin? How do you think about that whole conversation?
Well, I think the size of the balance sheet is important for a moat, just because I mean everything that we just said before. I mean, getting the Bitcoin is step one, and then holding on to it is step two. And when you have a larger balance sheet, it allows you to have cheaper cost of financing. It allows you to have more optionality in terms of what you can do with that Bitcoin to make it productive. Gives you more optionality in terms of different products you could launch in the future with a large collateral backing. And so that's where the size comes into it. I think everything that we were just talking about, it's really what Guy just said. It's about what Saylor and Strategy says, intelligent leverage, really. And that's what you want, like long duration, ideally low cost, low cash burden, no restrictive covenants, debt or equity financing that doesn't like encumber your Bitcoin. Those are the kind of things you need to think about, because you're trying to just structure your liabilities to match the duration of your asset. And there's no longer duration asset than Bitcoin. And so that's when companies and different management teams can just run into issues when they take on too much leverage, or the leverage has unfavorable terms that puts you into trouble when Bitcoin volatility rears its ugly head, like we've had the last quarter. And so that's a big part of it. And when you're really down to it, these are companies that have capital and they want to keep that capital, but if they run into issues, they can sell it. I mean, even Michael Saylor says in recent earnings calls that they are willing to sell their Bitcoin if they have to service their dividend. Now, I think, I can't speak for Saylor, but I think that's literally like the nuclear option for him. Like, he never wants to sell Bitcoin. Nobody wants to sell Bitcoin. Every Bitcoiner knows that. I mean, even personally, whenever I've rarely sold Bitcoin, but there's been a couple of times where life happens and I have some costs and I have to sell a little bit of Bitcoin, and I'll always regret it because, that Bitcoin increases in purchasing power over time. And that's a function of Bitcoin as well as fiat. And so you want to just hold on to it as much as you can. And so that's what I take to OrangeBTC as well. I mean, we do not want to sell Bitcoin. I mean, we were trying to do the opposite. We're trying to accumulate as much Bitcoin as we can for our shareholders in a creative way. And to do that, it really comes down to being smart with how you manage the capital structure, keeping the balance sheet clean. I mean, one of the reasons I joined OrangeBTC is because we did have a very low leverage ratio. And I knew that, from my experience with Bitcoin, that Bitcoin corrections happen. And so having a low leverage ratio obviously not only gives you more resilience to survive through these, but actually to take advantage of them. When you have this opportunity where Bitcoin's down 50% from all-time highs, due to wise decisions Guy and others on the management team made a year ago, now we're in an advantageous position to kind of take advantage of it. And so it really just comes down to risk management, executing with discipline, saying no sometimes to money that comes with maybe unfavorable terms, and having discipline to think really long term about where we want to be, not just next quarter or next year, but 5 years, 10 years down the line as we're building this company around this large Bitcoin balance sheet that is going to appreciate over the long term. And we just have to structure the company so that we benefit from that appreciation.
Yeah, I've got to imagine that discipline is hard. We've seen various strategies employed by companies that are treasuring Bitcoin, and some have taken on debt in different financing structures that have, really hurt the share price and really collapsed kind of the MNAV valuations around a company and the sentiment around a company. And then we've seen obviously some real winners in the space who I think have taken on that intelligent leverage and kept their balance sheet quite clean. Alex and Guy, I'll come to you guys. There seems to be a real sprint for Bitcoin treasury companies to mimic the key things that Saylor has done well. And I think other than acquiring Bitcoin in the first place, Saylor's biggest unlock is the stretch product, the preferred equities at first, and then finding that monthly unlock with a variable dividend on STRC. Alex, on the show, we've talked about how there's kind of a race on to, as Sam kind of touched on, match that liability duration with the long-term asset. Do you think the race towards digital credit products in the marketplace like Stretch is going to be a winner take most kind of scenario? Do you think there's opportunity in every different capital market around the world?
Yes, I think digital credit is the answer to the problem I was mentioning before. The 99% of the population that still doesn't understand Bitcoin or is not able, but it's related to not understanding, not able to sustain the volatility. Because if you're not able to spend the 100 hours or 1,000 hours of your time to understand Bitcoin, you will not be able to sustain the volatility because you don't know what you own. And Bitcoin, the nature of Bitcoin is to have cycles that can do minus 90% and that can do plus 10x or 20x or more. And you want to be on that roller coaster because you understand that this is a long-term strategy. And at the same time, a lot of Bitcoin treasury companies want to provide a solution to the population and to the institutions with a product that can be fitted for that purpose of Bitcoin adoption, but in a way that reduces the risk, the volatility for the investor. And so, of course, the objective of digital credit is to strip away the volatility of Bitcoin, at least a big part of it, and to provide a small portion, but a big one compared to traditional returns of the potential benefits over time. And it is quite surprising that you just have a handful of companies in the world that are actually focused on doing this, on that digital credit component, meaning to have a perpetual instrument that doesn't have a maturity and that allows to go the longest possible way on that carry trade for a lot of investors between the performance of fiat and between fiat debasement and the performance of Bitcoin over time, but in a way that they can arbitrage the cost of capital to have euros or dollars or reals that is about 3 to 5% potentially, with the interest rate that you can get with those digital credit products that can be double digit. And so in traditional markets, we know that this happens in many currencies, for example, or different asset classes, people having the trade between the Japanese yen and the international stocks and so on. But you have now that big opportunity between markets that have that performance of 3 to 5%, the monetary funds, and this new type of market with a performance of plus 10% and close to 0% of volatility. And so ultimately, not everyone needs to know how a car functions or how electricity comes to the home, and not everyone will have to understand how those 10% can be generated. But a lot of times, and in France, we also get a lot of that question of, is it a Ponzi? Is it where those 10% plus come from? And now people can start to understand that the Ponzi is not Bitcoin and it's not the digital credit product. The Ponzi is the fiat currency debasement, and it's the general system of pensions, at least in France, that is based on people paying for the pension of the oldest people without capitalizing, And the core difference of the strategy offerings is, of course, that strategy has the capital. As Sam said, strategy is able to pay the dividends right now for 70 years with their current reserve. It's just that strategy is able to find new ways of financing that allows them to not have to sell the Bitcoin. But those products are really the products that will completely transform the investment horizon over the next 5 years, because they will be the easiest answer to Bitcoin for institutions, Bitcoin for retail investors, and Bitcoin for corporations even. So I'm very bullish on the sector overall. I think you cannot say that Bitcoin treasury companies, some of them might have had a very bad performance after just 8 months. A lot of them were new, didn't really knew the type of investors that came in, and also entered in the start of a bear market. So in my view, that's a multi-year, decade type project, a type of industrial project where you raise a large quantity of Bitcoin. And if you are able to issue the leading digital credit instrument in your country, in your region, then you will be the company that accumulates the most Bitcoin. And today, in my view, only maybe 5 or 6 companies have understood that in the world. And in my view, those 5 or 6 companies will be the companies that will be the fastest growing in the next bull market.
Guy, how do you think about digital credit? We've had some news recently here in the U.S. There's Strive is launching a new ETF product, pending SEC approval. That's kind of a derivative of STRC. It's a derivative of SEDA. They're going to be holding those digital credit offerings. We've got there's some like DeFi projects out there, Apex, that I haven't been following as much. We saw them speak at Strategy World. We saw Buck Token talk at Strategy World about how they're collateralizing Stretch and offering basically a derivative product as well. Do you think Bitcoin treasury companies are going to be the ones leading the way in digital credit, or is there the potential for these derivative products on digital credit to just scale to a massive degree and bring Bitcoin exposure to the masses? And how important is that, Guy?
Yeah, I think, Tyler, just for being more plugged into the ecosystem, like other treasury companies are likely being the first movers, right? We haven't discussed this yet, but we were actually the first listed company. OranjeBTC was the first listed company to add some Stretch to its balance sheet. So Alexandre mentioned a little bit about this arbitrage opportunity, and we did a little bit of both. We had capital in US dollars sitting on our bank account, earning money market returns, and those dollars are kind of for runaway, for operational costs. and we have a decent balance of the debt. And for like over the next essentially year and a half, 2 years of operational costs, and instead of letting it on a money market account, getting something close to 2-3%, we moved a good chunk of that piece into stretch to earn 11%, right? So that was a movement that we did about 2 months ago. And then following that step, we went one step further. And given that we have a meaningful balance sheet, we were able to take essentially a line of credit that is not ideal to buy Bitcoin because it comes with recurring payments, it's short term, so it's a risk profile that for acquiring Bitcoin, we as a company don't like. On the other hand, to buy something like Stretch makes a lot of sense because it's liquid. It pays dividends on a monthly basis. If for any reason the line of credit gets reduced or is not available any longer, we can sell, stretch, pay back the loan, and like that credit line is much cheaper than 11.5%. So essentially, we build a $10 million position only on that movement, right? That will generate a few $100,000 per year for the company, which will not make or break us, but at the same time covers a lot of our operational expenses. So that's another innovation. We saw then Strive kind of doing kind of the same. They did a larger position. They did, I think, $50 million of their cash holdings into Stretch. And then we've seen Strive also announcing that they applied for an ETF, is an active ETF to invest in digital credit, along other DeFi projects. So I think that will continue to grow. And it's been, I think, now 8 consecutive dividends for Stretch. All of them have been paid. We know that investors want to see with their own eyes, right? When the money actually gets in their bank account, that's okay. This is real. So I think the longer it goes on, the lower the volatility, and we're seeing Stretch trading extremely well at a very complex macro scenario with war, Bitcoin going to 74, back to 65, and they managed to navigate volatility quite well. So I think it's a question of time, and more we're going to see new structures, new solutions, and other companies adopting Stretch. And as a result, Bitcoin is being acquired, and $5 billion worth of Bitcoin were acquired over the past 8 months out of this product. And we could see something north of $10-20 billion being acquired over the upcoming months. So it's a new innovation on the space, and that's always surprises me when people are questioning Bitcoin, is the amount of people in this ecosystem building a lot of new solutions and different ways to incorporate Bitcoin in different types of business and strategies. And that what will make the ecosystem win long term is new solutions, new applications. Some people love it, some people hate it, but Bitcoin doesn't care, right? Bitcoin keeps running, and the more applications and the more ways for people to get exposure, I think the better in terms of global adoption, which is the ultimate goal here.
Yeah, it's been wild to really track the progress of Stretch. You know, it's been holding its par pretty closely this past month plus, and of course paying the dividends every month. They held the dividend steady for this upcoming month, and it makes sense how your company was able to adopt Stretch because you totally understand how it gets. You're a Bitcoin native company. You grok it easily. Strive, same thing. They understand the value prop of Stretch. You know, if you're holding some cash, why not, you know, kind of arbitrage your funding rates. The big surprise to me is seeing how much, I guess, traditional finance capital has flowed in to help that peg be maintained, as you said, along with a macro backdrop that is maybe a little less bullish. You know, certainly Bitcoin's price is reflecting that. Has that been surprising for you, Sam, to see how quickly that Stretch has scaled, how quickly it's been able to grow to a $5 billion in size? And like Guy said, you know, we could see this thing double, triple, quadruple in the coming
Yeah.
months to a year.
It's I guess it's a little surprising because it is like a Bitcoin-backed security, and I think people still have to learn a little bit about Bitcoin. But I think it just shows you like how much better of a product stretches compared to traditional alternatives out there. Like I think about network effects with social media, for instance. Like if somebody built another X, that product would have to be 5 times better, or 10 times better for anybody to move over to there. And I think that's similar to what you're seeing with Stretch because it is 5 to 10 times better than anything else. And it's not just that the yield's high; it's that yield is backed by capital on their balance sheet. First off, it's durable yield, backed by the hardest asset, the best Treasury reserve asset known to man. And so that's the first part of it. The second part is that it's highly liquid. It's the most liquid preferred stock in the entire market, and it's not even close. It's also got the monthly distributions, which makes it a very low effective duration. And so the asset coverage, the liquidity, the monthly distributions, all of those things together make it just such an enticing product. I mean, it's hard not to look at it and say, how does this not work? And I think one of the interesting things is when you see a critic of Stretch say like, well, this isn't going to work. Like you hear like Ponzi, you hear all this stuff. But really, I read a piece, I forgot which major publication, but they were critiquing it. And then one sentence said it all. It only works if Bitcoin goes up. And I'm like, yeah, that's the bet. That's the bet, is that Bitcoin continues to appreciate in purchasing power and fiat continues to be debased. And so that's why they can issue this 11 really competitive yield, because they're betting that Bitcoin's going to outperform the 11.5% over the long term, which it has historically. And, historically, if you look at the 10th percentile of rolling 4 or 5 year periods, it's typically higher than 11.5%. And that means 90% of the time, it's much higher than that. And so I think what they're really doing is that they're offering this really attractive yield that has it's a differentiated yield. It's a different risk profile than any other yield out there. It has different price drivers of the underlying collateral than anything else out there. And so that's just really compelling to not only corporates, but also individuals. I mean, you saw Fong Li say that 80% of Stretch ownership is retail. And when you're looking at retail, it's like what Saylor says, who doesn't want a savings account that is paying 3 to 4 times more than whatever else is out there? I mean, everybody wants that. And you don't even have to think that it's backed by Bitcoin, but the fact that it is makes that yield more durable and have very different risk profile than any other yield out there. And so I think you're just going to continue to see increased market awareness around what this is. That's going to lead to deepened liquidity. The deepened liquidity is going to provide even more price stability to Stretch, which is the more price stability, the more perceived stability makes more people more comfortable allocating to it, which drives demand for it. And that just creates that flywheel, which creates more demand for Bitcoin as strategy can raise more capital to acquire more, which improves the creditworthiness and strengthens the balance sheet, which makes Stretch even more stable. And so you can just see this like flywheel, and it's so exciting. And so I think that this is going to continue to just make waves and be extremely disruptive to the entire traditional fixed income market and credit market. And they haven't seen, I think, a lot of innovation in that realm. And Saylor's coming in and he's bringing it with Bitcoin, and it's powered by Bitcoin. And so I think it's just an incredibly exciting time to be tracking the adoption of this, because I think Stretch is going to be seen as a landmark moment 5-10 years from now.
Yeah, I really think so. The flywheel that Saylor has been able to build backed by Bitcoin has been incredible. It shouldn't be surprising to us. It's been super exciting to see how he's innovated in this space. I think it's, like you said, it's going to grow via word of mouth. Retail is adopting it at a breakneck speed, and it's going to be just a great tool to orange pill more and more people across the globe. Not only in North America, the global South, all over the world. People need durable savings. We've got just a couple minutes, Alexandre. I'll leave the last word with you. You always leave us bullish. Tie a bow on this thing for us.
Well, it's quite fascinating to see what strategy has achieved after 5 years. And you can just, and even 6 years now, and you can just even not imagine what strategy will be able to achieve after 10 years. And by 2030, Stretch will be billions and billions, and you will have different types of securitization around Stretch, and you have tokenization all around the place, and you will have distribution of Stretch by a lot of banks, and this will completely overcome other types of related type instruments. Strategy is literally providing the equivalent of US Treasuries, but for digital capital markets. And digital capital markets are going to, over time, replace traditional ones. The traditional markets will be the digital capital markets. And the king of digital credit is already Stretch and is going to create, as some said, a flywheel that is going to flow into Bitcoin in a force that people completely underestimate. It is already in the strength of some weeks, completely overcoming the supply of Bitcoin mining by 2x, 3x, sometimes 5x. And you can just imagine in a bull market and with the next halving what those ratios will be. And it will be probably 10x. And if you add to that the other digital credit instruments that companies like ours are potentially going to issue in their respective countries and regions, you can double that, and you see that the structure of the market will completely change. You will have a higher and higher percentage of companies that never sell and accumulate Bitcoin with digital credit issuance that has no maturity. And in that way, that completely reduces as well the liquidation risk from those leverages risk that we mentioned earlier. And that just provides for the conditions of a very impressive bull market in a way that the diminishing returns theory will probably have difficulty to anticipate. So my view is that there is really complete outsized opportunity, that the levels that we are in, we have seen that before. Bitcoin has done minus 90%, minus 80%, minus 70%. And now we are at the minus 60 to 70%. And after those types of levels, Bitcoin typically does more multiple of 3x, 5x, 10x, 20x. And this will bring us towards $1 million. This will bring Stretch to levels that we cannot even imagine right now. And the fact that you have companies that are also accumulating Stretch is going to amplify. At Capital B, we stick to Bitcoin. We are all in on Bitcoin. But I do understand that there is different time horizons for companies, and that you can have also different type of strategies around that. But that's really impressive to see. And I think the number of instruments around digital credit will 10x in the next 3 years, and that the size is going to 100x over the next 10 years. And that's really impressive to anticipate.
Great stuff, Alex. And for Guy Gomes and Sam Callahan of OranjeBTC, who are bringing Bitcoin to Brazil and Latin America, for Alexandre Laizet of Capital B, who's orange pilling the European capital markets, I'm Tyler Rowe at BitcoinTreasuries.net. Give everyone on the stream a follow, and we'll see you guys next week.